Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, August 30th, and the last webinar of the month, with just a couple days left to the close of August trade. Good to be with you guys here this morning. Dagon, good morning to you. Mark, Peter, Pete, and Pete are here. Steve, Ty, great to see everyone here in the room. So, I don't have much, guys. We're going to go over all the setups that we've covered this week. So we'll cover DXY, dollar yen, sterling, Aussie, Kiwi, Aussie dollar, crude. We'll touch on dollar Swiss with a nice breakdown yesterday. Euro yen is the only one I'm actually still involved in. Gold, very critical levels here, euro and dollar CAD. If you have any pairs that you'd like to review that weren't mentioned, or if you have any questions, as always, feel free to throw them on the message board. Guys, I just want to say a couple things. Some notes for next week. I will be out, obviously, for the weekend, extended weekend here in the US, guys. I'll be flying out, so I won't be back until Tuesday. All things held constant, we will have a webinar on Wednesday and Thursday. Okay, so I'm going to leave that up on the schedule for this weekend. Anything should change, I will tweet it out on Tuesday night. My flight gets in pretty late, so as long as I get in at a decent time, we'll do that webinar on Wednesday. No webinar on Tuesday, and again, the updates will start coming out again Tuesday night. One thing I just want to note, guys, it's the last couple of days of the month. You guys know where I stand on this. If you're newer to SB, guys, typically the end of the month for intraday trading, heading to the last day of the month or last day, more so of the quarter, but even of the month, a lot of rebalancing. Things can get really wicked on an intraday basis. You have, like I said, you have reduced volume, guys, heading into the holiday weekend here in the United States. People start taking off here basically starting today, and you just want to tread lightly, okay? Me, personally, my book is going to be pretty much closed. I'm still, Euro Yen is a decent short, I think. That one's still holding a little piece of it, but I'm not really looking for much new positioning right into the weekend. Okay, so we're going to stay light here. I'm going to go over all the setups that we covered. We'll take all your questions, but just keep that in mind, guys. The time of month and the reference of the environment you're trading in is very important. So we just want to keep that in mind. Ty, can you add Euro yet? It's on the list, brother. Yeah, it's on the list. Okay, I got your email, by the way, Ty. You're going to have to bear with me, sir. My next 3 weeks are completely swamped, but I will keep in touch. Okay, DXY. Here's what it looks like. The last update that we did on DXY here on the intraday charts was, I think, last week. Here's what it looked like into the close of last week. We were looking at this near-term descending channel. Here's the weekly chart look like, guys. We had just pulled off of major resistance. We're looking for that 200-week moving average. We closed well below that last week, and it's been a nice little drifter lower. So the next major weekly support doesn't come in until 93.65, 93.89. Okay, you have the 38.2 retracement of the yearly range, and you have the low week reversal close from 2016. So on a weekly standpoint, I still think there's room. It might take a couple of more weeks before this thing starts to drift, but keep this picture in mind. Very, very clear picture as far as DXY is concerned. On the broader chart. So longer term perspectives here and moving in the next couple of weeks. Again, major support doesn't come until a little bit lower. We've had a pretty nice 3-week decline off of key structural resistance. Could see a little bit more back and forth. We're heading into the close of the month. That's the weekly chart, right? That's the weekly chart. Here's daily. Look at this thing. We're sitting on monthly open support. We noted this yesterday. That level comes in at 94.56. We're trading 94.59, so we're just above it. Just lower. Here's the big region that we talked about on the weekly chart. Okay, you have a lot there. On the daily chart, you have this. It's a 38.2 retracement from the decline off the 2017 high. That gives you 94.20. You've got this pivot from last October and December of last year. Clear resistance, support, resistance, resistance, pivot on both sides. Here we go again. Here we go again. That level converges on basic slope. Basic slope support, resistance, resistance, breach, support. That's right there. So that's 94.20, 94.27. Hey, Ty, I appreciate it. Yeah, I'll be in touch, my man. That's in your near-term daily support on a break lower below the monthly opening range. But also keep in mind, guys, it's a decent, let me take a step back. Right now, what are we doing? Besides the fact that despite all this volatility, the dollar is pretty much unchanged on the month. What are we doing? We are testing the objective and simple monthly opening range low. Okay, there's nothing here that's tricky. We don't want to get overly bearish. We're testing the monthly opening range lows. This is the third day that the monthly opening range lows have continued to be respected on a daily close basis. So heading into the last couple of days of the month on an extended holiday weekend in the United States, that's a time where I just want to kind of take a sidestep, take a back step on this. Okay. Again, all things held constant, I do want to see a tag of 94.20, 94.27. It's a tight range. Estimated resistance 95.19 on a daily standpoint. That's still going to be the November highs of last year. And the levels are pretty cool, guys. It's just that momentum is just, kind of not giving us much here. Here's the intraday chart. So again, in comparison to last week's chart, here's the daily, right? All we did was rebound off this little region. We came right into resistance at 95.65. That held. Boom. Now we're checking monthly open support. Break lower would be 94.20, 94.27. Okay, levels are really clean. On the intraday chart, here's what it looks like. Okay, this is the 120-minute chart. Here's what the 120 looked like last week. Freakishly clean, right? Freakishly clean. There's 95.65 near-term resistance. You saw that hold. There's the pull lower. We're still within the confines of this channel. The median line's been kind of messy this week, but nonetheless, remember yesterday in the webinar, guys, we were talking, and I was telling you guys, it's too clean for comfort, right? For this thing just to hold 94.65 again and turn lower. Sometimes you got to be uncomfortable in trading, right? There's the hold yesterday, turn lower. You're still preserving the weekly opening range low. So again, I want to take a little bit more of a cautious stance, but that level is still resistance. 94.65, 94.92. Okay, this region right here. Basic slope resistance. You have that longer term 618 retracement. This is from the advance off the lows that you made in February of this year. And then a broader, this is the 618 retracement. This is just a 236 from the advance off the yearly low. So both of them, here, let me fix that for you so you can see it a little bit clearer. There we go. All right, so really sweet spot. That's your near-term resistance. Bearish invalidation would have to be the objective weekly opening range high. If we get through the weekly opening range high, then essentially it's a reversal trade-off support. So at that point, you kind of want to take a step back, let the dollar rally a little bit, take a little bit of a breather. It's been a pretty precipitous decline, really nice 3-week decline here. Don't want to press it right into the close of the month, guys. It's just it's looking a bit tired. So ideal scenario heading into the end of the week, you wash out, you drop into this 94.20, 94.16 is the low that we made back here for kind of like a little fake out stab lower and then a larger recovery before we start to get back on the short side again for the dollar. So I'm curbing my appetite on the dollar crosses, but that's sort of the outlook here for the DXY. Risk is still lower near term below 94.96. 94.20, I would even go as 94.16, as low as that swing low, okay, is where you're looking for a little bit bigger of a reaction if you see the drop. So not much conviction on momentum, but certainly the levels remain pretty sharp and well defined here on DXY. All right, that's number one. Let's jump into last night's update. We talked about dollar yen, sterling, Aussie Kiwi looks pretty interesting. For dollar yen, here's the first one that we covered. Here's dollar yen. Here's dollar yen last night. Excuse me. So two levels of interest. I think we could see some exhaustion. We didn't hit either of them, unfortunately. One of them was 111.86, 111.87. That was the August monthly open, as well as the 618 retracement, okay, of the decline from the highs. So a really nice confluence region of monthly open resistance and a Fibonacci. And then if this was a near-term consolidation break, we took this measurement yesterday in the webinar, the measured move of that triangle break would have us targeting 112. So on this breakout, I was looking for a possible short entry off of one of these two levels, which is what I was kind of alluding to yesterday. We didn't get it, didn't quite stretch into that 1186 target. And here's the move lower. I'm looking for near-term support now at the weekly open. That's 111.31. Okay, if we see some support there, there's still hope for dollar yen on the upside to go further. But that's sort of where I want to see the extremes capped on the downside here for dollar yen. Again, guys, time of the month, where we are, thin holiday trade. I'm really not hell bent on doing much here. One thing I do want to note why 111.31 for me is kind of a decent line in the sand is because look at the daily chart. Okay, we've been highlighting this 1139, 1147 level since the low that we made. Okay, back here on the 21st. Here's the 50% retracement of the range, and then we have those former swing highs from May. We saw resistance, pullback. That's where we capped out last week. Pullback, breakthrough. If this is legit, we need to hold here. Okay, we need to hold here. If we break back below this, I mean, yeah, sure, the lower parallel might catch support. The weekly opening range might catch support, but we'd have to cross that bridge when we get there if this thing breaks any lower. Right now, I'm looking for exhaustion in the U.S. trade session on a move into this level. If it holds, might be a decent entry. I mean, your stop is still a ways away. 110.94 would entail like a 35, 40 pip stop almost. So not my cup of tea, but the levels are still pretty clear in my opinion. Nothing's changed. Okay, we've kind of just pulled back here from the stretch higher. Now, if this is a breach of the weekly opening range, which is what I interpreted it to be yesterday, again, that highlights sort of this zone, 34 into 31, as an area of which you want to look for some support here on dollar yen. Any questions? Let's get real near term here. I just want to see what this drop looks like. Interesting. We might not even get down there. 111.40 is 100%. So if it's two equal legs down off the high, that'd be sort of your first level of interest. Let's see if the weekly range offers any further color to that level. That'll be right under the 50. Yeah. Okay. Yeah. Let's look for some support here into the U.S. Open. Again, I'm very hesitant to take anything that's not like kind of screaming at me. Okay. Peeking into oversold territory here, so watch out. I'd be more inclined to look for that drop near into the weekly open. Any questions on dollar yen? Number two. Number three is sterling. As I noted yesterday, for pound, I'm not really looking to get involved just yet, but certainly the rally's coming into some major resistance targets of interest. Specifically on pound, guys, you got some commentary yesterday that, well, I don't really want to even get into it. You got commentary yesterday from with regards to Brexit and how soft the negotiations can be. Long story short, you broke through last week's high, the objective weekly opening range, shifted the focus higher. We were looking for 129.75. We breezed through that level. 130.27 was the level that we had highlighted a couple of weeks or last week previously. Okay, 130.27. So we got that yesterday. And what's up there? There's a lot up there. Okay, there's a lot up there. So if we zoom this out a little bit, let me show you the daily chart first. I haven't presented the daily chart or the weekly because this has had me on the sidelines. I don't know what to do with that. You know what I mean? Once we recovered through, and we talked about this in the webinar, the fact that we broke through that lower parallel, came back and tested it as support before moving through, that's a conviction sort of breach and retest and run. So look where we are. We're testing the lows from last October, from last November. We're testing the 38.2 line of this range, which we've been following for quite some time. This is the pitchfork off the yearly highs. That 38.2 line caught resistance, caught resistance, caught resistance. Here we are again. Close lows from last July come in at 130.27, 130.16. So a decent little range here of resistance. You got slope, momentum just below 60, right? So on the intraday chart, here's what we're looking at. I wouldn't put it past this thing ahead of the weekly close to get 30.73. That would complete 100 off the low, two equal legs. Nice spot. But I can't really get super excited about chasing this from here. Near-term support, 129.74. We noted that last night. The low registered at 129.88. I would have been hard-pressed to take that. I don't know if I would have been a buyer there, but nothing changes here. Nothing changes. Objectively, I kind of still want to stay constructive above 29.37, last week's high, this week's opening range high. Bullish invalidation, still going to have to be basically up at 28.77. I'm going to clean this up a little bit. You know what? I kind of scratched that 29.74 level. Watch this. Near-term support. 29.37, 29.56. It's a 20 pip range, I know, but it would be a nice spot. It would be a nice spot to see some failure if we're gonna move higher on this stretch, right? Bullish invalidation, still 28.77. Top side 30.73, and the August opens 31.17. Both pretty big levels we still need to get through. Dagon says, would a long bullish inval be an option with the correct price action? Explain that to me. I'm not sure what you mean. Would a long at bullish inval? Yes, that would be an option. I would approach trades like that very cautiously, Dagon, but those are your money makers, man. Especially if we get it sometime over the next 48 hours into the close of the week, right? Why? Well, your stop is pretty well defined right against the weekly lows. It's a bigger stop, yes, or even if you take it above the previous swing low, but you're at like prime positioning. So if we were to dump into this drop over the next 2 days, I'd be looking for exhaustion. I'd be looking to try to take a stop against those lows. And then, based on what we're seeing on daily price action, it still looks like, we're coming into or this is a pretty significant low, at least on the near-term front. At least on the near-term front. Now, what about near-term price action? Some of you might be thinking, Ty saying, explain further. Give me a question, Ty. You might be thinking to yourself, well, Mike, if the risk is for a drop in 28.77, would you be interested in a short? I personally wouldn't be unless we got exhaustion into one of these levels. So if we rally today or tomorrow into the close of the month, you kind of see a spike and then a significant pullback, a 4-hour reversal, divergence. It might be a decent short scalp just to play the inside of this parallel, right, down to the lower bounds. But all things held constant, I'm still kind of in a buy the dip mentality. I would just want a larger pullback in sterling. And remember, everything goes in context, guys. Playing the pitchfork boundaries, yes, those are always going to be your best plays, Dagon. But everything keeps everything in context, right? We just talked about DXY. I know Jamie yesterday with you guys went over US dollar. He loves to follow that index on the dollar, but both of us have basically the same outlooks, right? That we're seeing the risk for further declines near term, but we're heading into some pretty large support levels. So heading into the start of next month, maybe a new low early in the month, or if we do register a new low before we close August, I would be looking for some sort of near-term recovery in US dollar early next month. That's not to say that we're broadly bullish again, but if we're going to get some sort of corrective rebound, we're reaching levels of which that should start to materialize. Is there a method you use to determine a fade trade versus a line we blew through? Yeah, Ty, couple things. Hourly closes, right? If intra-hour were to break through resistance, and then we close the hour back below, like let's say here, Okay, obviously we're selling through that 100, but let's say here, this median line, something like this. This screams exhaustion, right? You broke through the slope. You tested the weekly opening range lows, but you closed well above that technical formation. Those are typically exhaustion trades, the throwovers, right? Obviously, I stress the hourly closes. So if we take this into an hourly close, you can see, bring it into a line chart. Typically, I mean, it looks super clean. Forget the wicks. Now, for like scalping, obviously we get in much tighter time frame, right? So we're looking at these for sort of validation, but that's why you never buy the spike or sell the spike. You want to wait for the market, for price action to tell you that we're turning. And a lot of times that's either an hourly reversal or a really quick retrace on building divergence. There needs to be something in near-term price action to give us that tell. Now the breakthrough typically is easier, right? The breakthrough is you're looking for a breach. You want to look for a test back of that as support, and then the launch. That pullback would be the entry. So a lot of times you'll see that break, test of support, and then rebound, just like we did. We just noticed it, or we just noted that earlier in what trade were we just talking about? Was that DXY? Right? Break, test of support, move lower. This is your exhaustion trade. On the rally, momentum comes in, fails ahead of 50, right? Major resistance level, weekly open just higher, you slide lower. Here we are again, momentum coming into 60. If the downtrend is intact, 60 typically holds. This pushed a little bit through, but it was a critical level that we were watching. So on a trade like this, you're looking for exhaustion. Now, if you get real near term into these, Ty, you can see it clear, right? You can see it much clearer. So here's like the 30-minute on that advance into a threshold we're watching, right? Divergence. Price action is making a new high. The oscillator is making a lower high. On a trade like this, again, I'm not huge with using these as sort of factors, but there's your support trigger. The break after failure on divergence. You're at a threshold we're watching anyway. We're bearish DXY. So there's a lot of different things you can look at, but the most important thing, Ty, is that we focus on what near-term price is saying. When you're heading into these levels, unless, again, you're opening up a swing trade and you have a limit order and you have a stop and you have a well-defined risk, you're a little bit wider, that's fine. But for someone like me who's a little bit, I'm a little bit closer in on the time frame and on my profit targets, I really need to see a turn, something graphically represented in price to tell me that it's a fade. Does that help, Ty? Hope that offers some clarity there. All right, let's move on. Number 3, sterling. So British pound, we covered that, right? That was number 3. Number 4 is Aussie key. Ty says yes. All right, cool. Number 4 is Aussie key. So here's the interesting thing with Aussie key at this point. Where we turned from. Okay, so last night I wanted to update you and just highlight these near-term two near-term targets. Okay, one of them was 108.69, and the other one was 108.41 to 108.31. This 10 pip region here. On the slope, it's been very clean. Now, yesterday you saw momentum dip below 30, and then we were kind of sitting at 30 as I was writing that report, right above that 100% extension. So I did, see the risk for a near-term recovery. Bearish invalidation we had at 109.38. So even if it rallied up to here, this would have been an area we would have started to look for short exposure again. Well, we've since broken, right? So we're no longer looking for necessarily a short on Aussie key per se. I think you get a little bit higher from here. Here's the chart looks like now on the 120. We didn't quite get into that 108.69 level, right? Yesterday we kind of hesitated. We broke through the median line. There was the first level of resistance we were looking for. Didn't hold. There was the second level of resistance we were looking for. Didn't hold. So, I kind of have a flat bias here. We're essentially, guys, unchanged on the week for Aussie key. So keep in mind the broader picture of where we're coming from. Again, the daily chart. This is messy. This slope was beautiful. So when we saw this break yesterday, it's pretty encouraging, right? To look for a drop into this critical zone. Remember, Ty, we were talking about this yesterday. You liken this to the dollar yen 109.90 level, right? That we were looking for so many months. Well, we got a pretty strong rejection here, pretty strong rejection. And we went through the bearish invalidation level that I was looking at through weekly open. I just don't want to touch it here. I just don't want to touch it here. Ideally, if we rally again and fail towards the median line, break back below 109.12, might be worth a resumption type of outlook. But from here, I don't like that. I don't like that. Okay, expect some more sideways action here. Maybe even a rally back up towards 109.90, 109.80, that level that we've been following, that huge pivot. That was the break last week. Maybe even a test of this again, guys, before all is said and done. I don't know. All I know is that it broke through my bearish invalidation level. No longer looking for shorts here right now. Kind of need to sit this one out for a while. Any questions on Aussie keys? Anyone involved in this right now? All right, Aussie dollar. So number 5. The last thing I wanted to update yesterday before I gave you that update on crude, which is so critical right now, is Aussie. And I told you I'm not operating on this right now, but there is a clear consolidation break or a consolidation in view again. Aussie gave us that consolidation break last week. It broke 73.27, 73.37, a huge pivot we've been following for months, shifted our focus lower, turned pips ahead of the 72 barrier, came back, checked it as resistance. We've been pivoting all along that critical zone, 73.28, 73.38. So I've been doing nothing here. The only thing I've just been noticing is obviously lower highs and higher lows. Okay, what does that tell us? Well, it tells us that we should be getting some sort of near-term breakout over the next coming days. Now, the favored move, in my humble opinion, guys, and again, this is just me, I favor a downside break ultimately of this move. And that's really based on the weekly charts and what we're seeing here in momentum. There's really nothing, it looks like a dead cat bounce to me. I mean, if we're going to get some sort of corrective move, I would have liked it a little bit lower, or if we would have held here. This, you know what I mean? You're not, I guess you can say you're getting some divergence if we close this week northbound of 30, but it's subtle, Again, keeping things sort of as objective as possible, right, on a closed basis. Look at this. This is the reason why I still think you get some more downside here. That 38.2, 73.27, 73.38. We were talking about that level forever. And intra week, right? We tested it like 8 times before we finally broke. Look what happened when we broke lower on the weekly. We came back up, tested it as resistance on a weekly closed basis. Break of support, zoom, retest, move lower, and not only that, guys, and again, just my opinion, but not only that, but when you look at Aussie price action over the last few days, right, despite all those dollar losses, Aussie hasn't really been able to make much progress. What are we, we made a 2.6 stretch off the low? Maybe 2.9, you know what I mean? And you look at something like Euro, and this thing just ripped, right? You look at something like Swissy, and this thing, Swissy just ripped. That's Swissy strength, dollar weakness, right? Then you look at something like Aussie, and you're like, oh, right? So despite all the dollar losses, Aussie couldn't make that progress back through key support to give us the follow through. In my opinion, again, I think the risk here is for a break to the downside. I would ultimately want to fade a deeper cut lower, but there's just not enough conviction here. And heading into the end of the week, I'm on the sidelines for Aussie. So, wait for this consolidation break. Like I said, a breach of the weekly opening range high objectively shifts the focus back towards the August open in 74.24. Downside break of the slope, I wouldn't get super excited. I'd be looking lower, but it's really the low day close. Remember, we highlighted this yesterday or last week. Once we broke back below 73.27, I thought that was the all clear. I thought this was, a false break back above a key pivot, then a move lower, really demanded move, right? I mean, just huge range drop. Look where we bottomed out, right at the low day close for the year. So even if we get this break, I need to see the low day close give out to validate the resumption. And then you're looking for 72 and 71.37, 71.45. But respect the break, guys. Until we get out of this consolidation, if you feel really compelled to trade it, again, it does look like we've made a break of the weekly opening range. Shifts the focus to a late week low. It's Thursday, Friday, right? So maybe you get a drop into that parallel, but I would be trading inside the range for near term until we finally clear it. So something to track, not necessarily operable right now, but I do think over the next couple of days you do see this thing crack. Some coiling ready for a move, says Digon in Aussie dollar. Yes, sir. Yeah. And you saw that a couple, we've been seeing it. This thing coils, breaks, stab. It's just funny that we go from one triangle to the next. And I showed you that yesterday. That's why I gave you the 240 view. Because when you look at this, here's the consolidation, break. And all of a sudden we're consolidation again. Are we going to break lower again? We'll see. Is Kiwi like Aussie, says Peter. I wouldn't say it's like Aussie. I think Kiwi's the better play to the long side, actually. That's just my opinion. This broke upslope support, so I think you'll look lower, but this one on a weekly basis, on a daily basis, has shown way more resilience than Aussie has. So, I think this pullback, you don't want to get too excited on it. Now, obviously, momentum on a daily standpoint, failing at 50, that's still maintaining the broader down slope, but here's your median line of support. We're sitting on it right now. Gun to my head, I do think you move lower near term, just because, again, if this is a weekly opening range break, objectively, that keeps your focus lower below here. Okay, but 66.16, 66.15, guys, same level we were talking about last week on the breakout, test is support. That's still my level. In fact, we can take this to the new high now. It'll choke it up a little bit. 66.14, 66.16. Decent pivot in price. So, I wouldn't be too surprised if we get down there, Pete, but the broader picture here, I still think looks a little bit more constructive than Aussie does. Let me clean this up for you guys a little bit. Just bear with me one sec. I bet you that 50's right. Okay, not yet. Yeah, I think near term you have to look lower, but I'm of the mindset that this pullback is corrective. Pete, does that make sense? It doesn't seem to be going anywhere, having a hard time, but yes, it makes sense. And that's the case with a lot of these trades, guys. Some of them are just not going anywhere, and that's okay, right? That's okay. We're not always going to get a clear-cut pattern play. Timing and environment that we're trading in, again, I can't stress it enough, is not surprising to me that some of these are just kind of losing direction here, especially into the end of the month. I know this chart is messy. Let's kind of work with this right now. And again, guys, the biases or the opinions that I give you when you ask these questions are really just based on objective stuff. Again, here's your weekly open, right? Is right here, actually. Let me highlight it for you. Here's the weekly open. We set a weekly opening range low. We rallied through the open. We test the weekly open on a closed basis. It holds. We test the weekly open on a closed basis. It holds. Here's the break of the objective weekly open. Here's the break of the objective weekly opening range low. So, you know, Ty says liquidity doesn't really return till week after next. That's how I remember it. Yeah, Ty. So it's the last extended weekend break here in the States, guys. So yeah, Wall Street, the city tends to thin out completely, even into the start of next week. Ty, heading into next Thursday, Friday, you start to get the return of U.S. data, key non-farm payroll reports. Um, Obviously, we're expecting the Fed to raise interest rates by 25 basis points in the coming weeks. So yeah, there's a lot to upcoming. But as far as liquidity is concerned, I'd probably say yeah, Thursday, Friday start to see return of full market participation. The following week, yeah, you should have full on board at that point, full participation. But just be careful. And why does liquidity matter? Some of you might be asking yourself, well, Mike, why does that matter? Again, the smoothness in price, right? If there's real vacuums in liquidity and a big bid comes in, price will tend to just pop higher. That's when you'll see gaps, and that's when you'll see real quick run ups and big orders just slam the market down. That thin liquidity condition can wreak havoc basically on intraday trade. So just use a little more caution here. That's Kiwi. Pete, does that help as far as Kiwi is concerned, sir? Again, gun to my head, I still think you look lower. 66.15, 66.14 is where I'd start to look for a little bit more of a meaningful support bounces if this is going to hold. He says yes. All right. Can we have a quick update on Euro, please, if there are any? I'm short at 17.30. You know what? We can take a segue. I was going to take a look at crude next, but let's do it. Eman, great to see you back in the room. Welcome back. Euro dollar. Here we go. This will be number 6. So here's our Euro chart, and here's what we've been looking at. Hey, you're more than welcome, Eman. So for Euro, here we go. Okay. Early in the week, we had highlighted this August open resistance 1690, a topside break. The July high day close with 1750. We failed ahead of that, right? The high was 1733. Here we are, a little bit of a consolidation. This is near-term support. Okay, this is near-term support. When was the previous update? Do we have a chart on there? So this is the same channel from the 21st of the month, guys, that we've been following right here. Same channel. We broke the 618, the 786, broke the upper parallel. That's this. Popped right through. Failed ahead of the July high day close, and we've just been holding this range ever since. So no change to any of the levels that we highlighted earlier in the week. Your short, Eman, is predicated on a break of this support, a break of these lows. You really need to see, and the reason it's pretty clean is because, again, just your weekly open, that was sort of the stretch high that you made. You came back, tested it yesterday. Here's the recovery. Again, if you break below 1650, you're on good on you, right? 116.14's weekly open support, that would be your first target. But if this holds, you're still in the uptrend. So just use a little caution here. We have had big moves in Euro and DXY in August, maybe because of light liquidity. Could be, yeah, Ty. The seasonalities actually heading in September are pretty bullish for Euro. I think it's the second, if I'm not mistaken, last time I looked at it last week, September is the second most bullish month for the Euro. So seasonally speaking, heading into September, tendencies actually do favor dollar weakness. Now, we saw a pretty big drop this month as is, but on whole, it's just funny because on whole, we're basically unchanged on the month, despite everything that we saw. Here's the monthly open DXY. So, I take seasonals with a grain of salt, Ty. It can definitely be helpful, especially if it's sort of validating what you're seeing in price already. But I digress. So for Euro, Eman, this is what you want to watch. You want to see a bank close below or push below 1650 here. I wouldn't get too aggressive on it, but certainly from a momentum standpoint, the way we turned off the highs, we noted yesterday that even into this rally here, you were seeing basic divergence on the weekly stretches that we've been making. So yeah, I think the risk is for a pullback, specifically if you break basic trendline support. But you know, it's funny because if that breaks, you're going to see people on Twitter starting to call for 112 again. And it's just it's a pullback off resistance. So bear with me. I just want to see what this looks like, just to give you some targets here, Eman, if it does break. Hmm. Okay. Just going to leave the 38 there for now, just as a sort of reference. Okay, that's pretty darn close. Okay, so you're seeing some parallel action here, right off the highs, touch for the last two lows that we made in price. Um, so Pooja, I would still watch 1650, 1653 to be exact, as that opening range high, the swing low that we made here. But also watch this. Also watch this. That basically coincides with last week's high right here. This is last week's high, Friday's high. So that's 1640. That gives you a 13 pip region of support. That's sort of the open up, I think, for the decline if you get through this. But just watch both of these targets as we head into the U.S. trade session. I mean, all things held constant, to be quite fair, you're testing support right now. Here's channel support, right off the monthly low. Boom, boom. Here's your first test. And if this is corrective, again, this is going to get messy, but just bear with me. Woo! Here's your 100. Let's stretch it down just a couple more pips. 1637. 1637, 1653 is your first level. Both of these, okay? On your short, watch both of those. And if RSI holds above 40, right? Good spot for a long. On exhaustion, Euro, ignoring the fact that it is light trade and end of month. If RSI holds 40, yeah, if there would have been an RSI like sort of hold at 40 here, in momentum, Dagon, yeah, the long position on the exhaustion would be against this low. That's the only thing I'd be willing to fight. If we get down here, Eman, a good place to start booking some of that position. I wouldn't want to take a stop against there. That's too big of a stop for me. So if we get some sort of hold in momentum or cross back above 30 from oversold territory off this level, fading that low might be an interesting scalp for the long side. But you'd want to be cautious on it, okay? You'd want to be cautious on it. Pooja, does that help? Hopefully it will break that support quickly, man. Yeah, I hope for your sake it does as well. But watch both of these levels. I'd be taking off a little here. Stops at break even or better, definitely if you get down here, and let it play out. I mean, if you get the break, I do think you get larger pullbacks towards the weekly lows. At 38.2, which is a basic of the stretch, is 115.68. But all of this is moot until we break this. Okay, 1537, 1553. That is Euro. Number 6. So I guess let's just keep going with the dollar crosses and wrap it up before we close out the session into the commodities I wanted to cover. Here's dollar Swiss, typically the inverse, number 7. Real clean, real clean. I feel sick to my stomach because I'm actually excited about a dollar Swiss trade for the first time in like years. But here's the daily chart. I mean, let's take a look back at the weekly. Look at this thing, guys. Look at this thing. So we talked about the consolidation break. We got excited about the 98.45 break. all our beans, everything was all focused on 97.50. You had the 200 long week moving average, the 52 yearly, 52 week moving average, and former slope resistance turned support. We're probing below that region now. A material weekly close below this would be bearish. We came off a huge level. It's really important to see where we settle out the week in Swissy. Here's the daily chart. Okay, I'm looking for initial resistance, basically at 97.43. 97.43. That's your yearly open. That's the 200 day moving average. Basic 38.2 of the entire 2018 range. More notably, the median line for the current operative formation we've been following. So it's all lined up here. This was our target on the way down. This was our major key support. Again, humbly, I thought there was going to be a much larger rebound off that region. But the fact that yesterday pushed below and closed below keeps the focus lower. Okay, a downside break beyond here, and you're looking for the 50% retracement of the yearly range. That's 96.29. Broader bullish or bearish inval is still 97.84. Okay, so if we break through this, I'm neutral here. If we get back above 97.80, that would be constructive. Okay, you'd be taking out the former range lows, that 100% extension, slope, and that would shift the focus back towards the upper parallels. So all things held constant, looking for exhaustion here first, ideally bearish invalidation for the broader trend, 97.84, downside break, 96.29. Pretty clear, okay? Still deep and oversold, right, on a daily close basis. So don't get cute on this one, trying to play any type of exhaustion on the long side. In my humble opinion, I'm just looking for a rally to sell. Again, further adding some conviction. Man, this update in TradingView really sucks, huh? I'm having all kinds of issues with like copy paste and edit undo. But in any event, this is still being highlighted, right, as your near-term bearish inval. 97.83, 97.84. Former slope support. This is a little bit closer of a near-term slope just off the highs. There's support, support, break. Even if we come into it as resistance, you're still within the current downslope. Okay. Again, I wouldn't be surprised to see a little bit of recovery here. Not looking for anything else on the short side from these levels. You're seeing divergence in price on the 2-hour chart here. I'm looking for a rally to sell. Ideally, we fail right here again at the yearly open. On a stretch, this is sort of where I'd want to fade a spike. But really, there's nothing on the downside. Oh, yeah. See, I can't even undo that. There's nothing on the downside here, guys, until that 50% retrace. All right. Questions on Swissy. Here's the levels from earlier in the week. No change to any of those levels. We've simply broken below support. We've taken out that 97.53 level. And now that's sort of basically resistance. That same pivot range is resistance. So want to see failure here if we can. Downside 96.20, still room. Any questions on Swissy? Number 7, last but not least of the dollar crosses, dollar CAD. Here's Loonie. So, very similar type of outlook for Loonie, guys. I think, near term. Oh, okay, it's a bigger reversal here. I was going to say 29.67, but we just pushed through it. So this, we were looking like divergence. Price action made a lower low on a closed basis. Oscillator made a higher low, one below 30, one above 30. The risk is for a recovery, but I still think, here's the daily chart. Here's the daily chart. We were looking, this break was big for us back on the 27th. We were looking for a stab into 2880. Okay, the low registered at 2887, 7 pips off. And then here, right? 2845 is the big Bahama Mama. 200-day moving average, slope support, current channel support is all loaded there. So, on this rebound, guys, I don't look. The monthly open is right here at 130. You have the 100-day moving average at maybe like 129.90. But the point being is, I think you get a little bit more upside here. Ultimately, it's still a bearish trade below 131. So what do we do with this? I can't get excited about buying it, but here's the intraday chart. We're still at the median line right now. So there could be a hold right here. Momentum fails. We're above 60 at this point, or testing above. It's messy. It's closed the month. I'm not going to touch it. I just think if you fail below the weekly open, I still think that you still see a stab of those downside targets. Do I have enough conviction on that to take a trade? No. Could I get maybe an exhaustion trade here into the US Open? You're still in overbought territory in the 30. You're in overbought on the 10. You're in overbought on the 5. So there's no way we're going to try to fade this from these levels at this point anyway. So another tricky one to close the month, guys. But I think with dollar CAD specifically, heading into the start of next week. Well, here's the other thing. Heading into the close of the week, you do have CAD data, and then we have the trade negotiations, right? The artificially imposed deadline that they put them on themselves for Friday with a Canada trade agreement. Are we going to get that? Again, my humble opinion, I do think we do, but that might offer some alleviation to CAD. That might give some strength to the CAD, and it might drive it into that lower level at 2880 or 2840 first. So I'm not running away with this. I don't necessarily think you get a large reversal here yet. I still want to see a move lower towards those 2840s, 2880 levels in dollar CAD, and that's the make or break level. Okay, below that, you start to look for straight on resumption. But that's also an area where I'd start to look for possible exhaustion. Okay, right now, objectively, you're testing the median line. That's it. Support, decent pivot, support, break, acceleration, support, kind of messy here. Is this resistance? Former swing lows? This would be where you'd look. Okay, that's dollar CAD. Any questions there? Okay, Thai, Euro Yen. Let's hit it. Here's Euro Yen. So, oh, nice. Sweet. So look, the levels that we talked about yesterday or 2 days ago, this was a question that Ty had brought to the room here in the webinar, and I typically don't trade Euro Yen, but the levels were pretty compelling. Now, we did some longer term studies, if you guys remember, in that update from earlier in the week, and we were talking about the consecutive days indicator. So consecutive days on the back of this 28th update, we were talking about 6 consecutive days up. The last 2 instances, one of which was a 7-day decline, failed, right? We saw failure of 1 day before resuming higher. We actually didn't do that. Yesterday, we pushed higher again. So now we're getting 7 straight days of advances. And again, guys, when we look at these indicators, it's important to me that you guys understand we're taking this just as sort of a tell, as sort of an added factor. The sample size that we're using is extremely small. You can never make an assumption based on 2 previous instances, but now we're looking at updates of or gains of 7 days or more. And the last time we saw that was here, right? 1 day interruption before moving higher. The 2 previous 6-day advances that we covered was also 1 or 2 days of interruptions before ultimately moving to a new high. So I think you're getting a pullback here today. As it stands, if we see a break below or yesterday's low, that an outside reversal off the monthly open would sort of be a big deal to me. But for me, it was worth a shot. Why? Well, we had a really tight entry yesterday. The stop was super tight. And if we were going to be wrong, I think we were going to be wrong right away. Euros on a 7-day stretch. So I took off a portion of that at 130.30. We talked about this pivot region. At this point, we're gonna lower our limit or our stop to that level, and we're looking to book the rest at median line support. So if we get this, continued drop, watch the lower parallel. Okay, the formation is just ridiculously clean, Ty. I was in disbelief at how this continues to work. I think we slapped this on just in the middle of the month at some point, and 2 weeks later we're watching it. It's still holding. So the August open resistance, median line that held yesterday. Here's the move lower. Again, be mindful of that lower parallel. 2970 is basically where it comes into play. 2967, 2970, let's call it. And momentum is heading into 40. So this is going to be a tell, guys. If we break below 40, price breaks below these swing lows, you start to look for a larger recovery. In that instance, you tack on a quick retracement. Okay, we won't have any slope yet, but it would highlight basically 29, 28, still a level you target, and then this key zone here. Okay, the 38.2 comes in line with all those swing lows from earlier in the month. Weekly opening range low is 28.79. So 28.59 to 28.79, 20 pip region of support. That's your larger daily support, or more significant, let's call it, support on a breakdown of that parallel. But it looks decent. I don't get crazy on yen crosses, so if it pans out, great. If not, we're already taking a chunk off. It's not a big deal. Any questions on euro yen? Hey Ty, are you still trading this? Do you have specific questions on this? Feel free to let me know. Last but not least, I did want to cover 10 and 11 gold and crude. Ty says thanks. Hey, you're more than welcome, sir. Gold and crude. Here's gold. Here's gold. Okay. The pitchfork that we added early in the week. It's disgusting. Do you see this, guys? Support, 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 break, turn right ahead, lower parallel, resistance right ahead of the 50 line. I mean, this thing couldn't get any tighter. Look, there's been no play for me here. I'm not going to art on you guys. I haven't been trading this per se, but I think, again, as we said yesterday, my ideal scenario is you get one more low, okay? Sort of just your typical correction. Now, it looks like it could be in a consolidation type of play, so I think you do see a little bit more range-bound action. Levels are clear. 12.15 is your resistance, 12.14, 12.15. The breakout would need to be against the monthly open, the 100% extension. We talked about that yesterday. It's 12.23, 12.24. That's sort of your breakout. Your breakout zone right here. My near-term bullish invalidation is still 11.93. Okay, as long as we stay above the median line for the broader formation off the yearly highs, as long as we stay above that 38.2 retracement, I favor the larger recovery in gold. So look for a probe lower, but 1194, 1195, I'd love to see that level hold as support. Remember, the reasons that we're looking up for gold, this is a big resistance, and we did post an outside daily reversal off it, was big support. So this is why our assumption is that we still need to make another low in price. If we break above this, objectively, we're right on course. But near term, I favor a pullback into this region. A better position there. Ultimately, a breach above 11.15 should set you back on course higher. Okay. Last but not least, crude prices. And boy, how clean is this, guys? This is just so gold. No change to any of those levels. Okay, from earlier in the week. Yeah, crude prices absolutely disgusting. Look at this thing. So the focus is for a move, a failure up here. We highlighted 68 and 89 as a target a few weeks back, or a week back. This is from last week. We were looking for the monthly opening range high at 69.89. Basically that's what we're testing right now. The bigger level for me, if we break higher, is 70.40. or even 71.10. And I do think we get a larger pullback off that zone. Here's what the daily chart looks like for crude prices. So there's 68.90, 69.89. This is the level that we were targeting last week. Again, yesterday we hadn't quite scratched it, so I highlighted all three of these levels. These two specifically as targets, areas of interest for exhaustion. Just basic stuff. So let me go over with you real quick. What's that 69.82? This is going to be your basic 50% retracement of the decline off the yearly high. So real basic stuff. Add to that, or more importantly, adding conviction, it's the objective monthly opening range highs. So all you've done is come full circle. Here's the opening range high. Okay, you can't get aggressive beyond this until we clear it on a daily close basis. Again, there's 71.21. Now, the weekly chart, I'm going backwards here, guys, but I just want to highlight, I mean, all the charts that we highlighted in the update list are so interesting. This is a different take on the slope. So note that the slope that we're looking at on the daily chart is this one, okay? The slope that we've been following on the weekly chart is actually using the concerted low, high, low, and that put us right at slope support last week. So anyway, the reversal that we made, welcomed area, right? Welcomed area. Daily chart, intraday. Here's what we look like last night. So we got the 69.89 clip. You're getting divergence into these highs, so we could spill lower. 70.40 is an interesting level. Why? Well, it's as basic as you can get. Slope resistance. This is the same parallel here. Resistance, 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 breach, acceleration. Same parallel here off the lows, caught the low, is here. On the advance, near-term upslope resistance. Off the lows, same parallel, resistance, resistance, break, acceleration, support, support. Just take it off that swing low. We talked about this yesterday. Resistance, that's here. So I wouldn't be too far off. I think you don't want to fight this into the close of the week, but I do, if we get a spike into 70.40, that's my sweet spot. 71.21, 71.10 on a stretch is my favorite. Fibonacci confluences, 100% extension, 618 retracement, beautiful spot. Now, yeah, so 70.40. Watch it. And if this is 5 waves up, and I think Jamie showed you guys this yesterday, but your common measurement of wave 1 equaling wave 5 would put this here. So all we're doing is taking this measurement, taking that measure move and extending it off this low. So if wave 1 and wave 5 are equal, there's 70.40. Make sense? Look for exhaustion off one of these two levels for a near-term pullback, coming into some big resistance here. All right, that's crude, guys. And that wraps up the session for me. Thanks you guys for sticking out for me. I hope you guys have a great extended weekend. Again, there won't be any updates. There'll be an update tonight, definitely to close out the month, guys. But look, I'm going to be flat. So please do yourself a favor. Ty says, are you doing a teaching session tomorrow? No, Ty, it's every other week. So that will return next Friday on Daily FX. But enjoy the weekend, guys. Take some time off, a good time just to kind of let yourself regroup. Have your levels mapped out. Don't get aggressive into the close of the month. Really thin liquidity trading here. And we'll kick things off next Tuesday. So till then, best of luck trading and have a great weekend, guys. See you next week. Cheers.